Hey folks, so I've got a good spread trade working here. Let me bring in the chart a little bit. Okay, so this is the silver copper spread. So this spread, this blue line, these blue price bars are basically the equity difference between um, oh, where my thing go? Hold on a second. I've got to put my profit target in here. Okay, so again, the blue price bars are the equity difference between the copper going long copper and going short silver. Um, you can see that the red dots here are the prediction. So the future, the average movement of this spread is down throughout the entire day here. I saw this pop up and I went short right when we hit this midline, this yellow midline. So I went short on the spread. So if I go short on the spread, I gain whenever silver goes up or copper goes down. So it's a little confusing, I know, but spreads are basically the difference between two things. You go long one and short another instrument, and if you correlate the instruments, if you find two instruments that are tightly correlated, you can profit from either both sides or a strong move in one side or the other. Again, correlation helps mitigate some of the market volatility. So if you're long in silver and copper moves along with silver, then you can go long silver, short copper, and not have too much downside risk. That's the whole point. All right. So I am short the spread from the midline right here at this negative 38,163, and I'm up 450 bucks, 425 bucks right now. I'm holding out for this blue line. I think the spread could go all the way down. Well, technically it could go all the way down to, support down here. If I were to have put it down here, that's a $2,500 move from where it's at right now. Um, no, my mistake. Auto close. I'm short one. There we go. So that's only a $1,200 move. My mistake. But I'm not going to go that. I'm not going to be greedy. I'm going to stick right here. We're about 700 bucks away from target. And here's a quick look at what the two markets are doing. So the bottom chart is silver and the top chart is copper. So I'm going to benefit whenever silver moves up from the entry or when copper moves down from the entry. And looking at the difference of those two, that's my equity position. And that's what I'm holding out for. Let's see. So we're bad. We're having a little softness in the market. We're only at 270, 260 in profit. We'll come back. I think it's going to push lower. Again, I'm holding for another $600 onto this move. That's what this negative 546 means. So negative 596 is how many dollars are between the current price and this blue line. This is going to help me recoup on my lost heating oil trade today. So that's my goal. All right, I'm going to put it on pause and we'll come back when the market moves. Okay, well, it's not taking too long to move in my direction. We are pushing lower on the spread value. Again, the difference between long copper and short silver contract. I'm long one copper and I'm short one silver simultaneously. And this blue price bars are showing the equity difference between those two. And I'm holding out again, the red dots show historically that this spread on average likes to trade below this yellow midline. So I went short at the midline. We took a little bit of heat, but the market is moving in our direction. And we're 520 bucks from our profit target. Let's see if we can continue to push lower again with the expectation historically that this spread does move down throughout the second half of the day here. Each grid area, so the kind of the yellow, muted yellow background here, this is $500 in height. And the black area is $500 in height. So each one of these colored bands, black or yellow, is a $500 equity move. Um, So it's an easy way to gauge how much in dollar value a move is incurring. So again, we're 346 away, 380 from target, and let's hope that either silver shoots up or copper falls down. So silver is shooting up, which is good. I'm long silver, and copper is kind of a little bit up, but not as much as silver, and that's where we gain. So if silver outpaces copper to the upside, then we gain in our equity value. Let's see if we can push down. So I do see, let's see if we can draw a ray here. And if we do just a simple ray trend line, I think I might move up I'm going to move up my target. Let's move it up to here. I'd be happy. That would be about a $800 trade. Yeah, about 800 if I can hit it. Let's see. Don't want to be greedy. Don't want to push the luck on that potential sloping uptrend here. 184 from target. Now I could just go flat. I could buy it back. So I've sold the spread. I could buy it back. Um, I'm holding for this blue line, which is a touch buy exit. So I have a little interface here. Do you see my go flat, buy, auto close, show hide buttons? This is our trading interface. You can't really use chart trader in this instance because it's on two different instruments. So we developed this basically a custom toolbar to enter long or short in the market. So here we go. We're moving toward our target. A couple more pushes and we should hit our number, 34 bucks away. This is looking good. Silver must be, yep, silver is pushing higher. Silver is a heavyweight, 25 bucks a tick. We're 70 bucks away. A couple more pushes in silver. We should see this target hit. Now, the problem with spread trading is that you exit at market. All of the trades are either entered at market or exited at market, so there will be slippage. You can just expect that. That's why you can't really scalp these, especially on the metals, because slippage on copper is 12 and a half bucks a tick, and you can get 2 or 3 ticks easy. And silver is 25 a tick, and you can definitely get 1 or 2 uh, tick slippage. So you don't want to be scalping these. It's a little difficult. You could certainly exit one leg at a time if you wanted to. There's no problem with that. Um, you can leg in, you can leg out. It's not a problem. A lot of ways to trade spreads. This system is basically both in. When I sold this spread, I went short on copper and I went long on silver. And let's see, I'm up 700 bucks right now. Seeing a little bit of softness. Down, I'm only 109 bucks away from target. Came close. Another push down. We should see it. 59 bucks away. 46. There we go. Come on now. All right, we were filled. We're up about $800 on that trade. So that one worked out very well. Happy with that. Again, we went short right about this area. Let's see, I'm gonna draw a quick trend line. from here to there. So actually we were just up. We closed out with about $650 in profit. I think I might have gotten in a little higher. I don't remember exactly. I think it might have been about 750. Yeah, it definitely was that area. So that was our trade, plus 746 on a short spread trade. All right, that's it, guys. Thanks. We're moving lower. We're pushing lower. Uh, One thing to comment on is really the I also draw, you see these green, there's a green band down here and a red band. These are historical averages where this spread is, on average, it varies between these two levels. During this time slice, this spread can be as low as here or as high as this area up here. So these will move as the spread value line changes, the midline. But it's not uncommon to see the spread down here and the spread up here. During those situations, we look for a reversion to the mean. So had this spread moved up into this kind of overbought area, I would have been selling it up here and going for a reversion back to the midline. Here's a good example. We came down here to this area, almost touched the green zone below these green dots. We did start seeing, these are just a simple oscillator dots, oversold. The minute it stops printing the oversold, that means it's coming out of oversold territory. I would have been a buyer right in here had I been watching it at 9:20 in the morning. The only reason why I would advocate that is that the spread is historically, these red dots show, historically there's a selling pressure to this spread, okay? So I wouldn't necessarily be buying it. That's why I went short up here, because I saw the selling pressure is historical and not a bad idea to get short on an overbought situation when the spread typically is showing weakness. All right, well, that's enough me rambling, guys. Thanks again. Let me know if you have any comments.